The problem is data is very much in the eye of the beholder at the moment. The big picture is that we've got this tug of war between gravitational forces that are trying to drag markets down because of how bad the economic data really is, and we've got the sort of rocket fuel of stimuli that's trying to push it higher. And we've had that sort of tug of war going on since March. The stimuli tends to get weaker over time. The effect of that gets weaker over time, and one of the things in May that was able to support it was that people saw data, particularly coming out of the States, the employment data, the retail data, and that as being good. If you sort of take a step back and you look at it in perspective, the kind of percentage bounces that we're seeing are actually pretty meaningless. When you go down so far, you have to expect some kind of a bounce, and record numbers, 6% bounces, they're actually pretty insignificant in the scale of things. We need much more sustained, much bigger bounces to get us anywhere back towards trajectory. And at the moment, the tug of war is sort of being resolved to the downside. People just they're no longer believing that that stimulus is going to do its job and it's going to push us back up towards high enough levels.
Paul, there was a mea culpa in your notes here. You say, based on the 2020 visions and beyond, a plan that you had for the year here, you say our original case underestimated the impact of fiscal stimuli so far. Could you just focus on that for us for a moment here? Because as we now talk about some of the momentum coming out of the risk on trade here, there will inevitably be those who look to the Fed yet again and other central banks to provide further support for the market. Is it coming?
Oh, it's definitely coming. Absolutely. So, as you say, we sort of expected these scenarios, but actually we thought that the stimulus would have a greater effect than it's had. We thought it'd have a longer lasting effect than it had. We didn't anticipate COVID, so maybe that's the reason why it hasn't had the effect that it's had. But the Fed is basically a man with a hammer looking for nails everywhere. We're going to get much more of the same. They've expanded the scope of what they do. They've expanded the scale of what we do. But as I said in the note, this is 1974. It's not stagflation. It's not oil crisis. It's Barkman-Turner overdrive. You ain't seen nothing yet. We're going to start to see, a stimulus on a scale that is going to be shock and awe, because it's going to have to be shock and awe to have any kind of effect. So where in the past we used to talk about 100 billion, then we started talking about trillions. We don't think it's that long before we start talking about programs that are tens of trillions of dollars.